welcome you again. My name is Mark Youdell. I'm the Regional Outreach Coordinator for the Atlanta Regional Office of the U.S. Securities and Exchange Commission. We're here today to supplement, the great work of the Teachers Retirement System of Georgia. We've done a couple of events with the TRS, and we really appreciate the work that they're doing for teachers and educators here in Georgia. I can tell you myself, my wife is a former paraprofessional in the Forsyth County school system, so I know enough to be dangerous about what you all are doing and how your system works. So anyway, we're very familiar with the work of TRS, and we want to supplement their great work to help keep you as investors safe and keep your money for retirement safe. We're going to cover a couple of different topics here this morning. We're going to start with a real quick overview. A lot of people, the SEC, we're kind of a small, obscure agency of the federal government. Down here in the Southeast, I can tell you a lot of times when I meet someone and you start a conversation, then they say things like, well, what do you do for a living, Mark? I say, oh, I work for the SEC. And oftentimes I hear, well, can you get me tickets? Everybody thinks I got SEC football tickets. So that's not the case. We're the Securities and Exchange Commission, but we're going to talk a little bit about who we are and what we do. We're going to talk about the red flags of fraud. We're going to talk about some common scams that we see here at the SEC. And we're also going to give you some tips on how to keep the fraudsters and the bad guys from stealing your hard-earned money. We do have a disclaimer. I need to let you know that we're not providing legal advice today, and I'm not making investment advice either. So please take note of that. The SEC, Securities and Exchange Commission, again, we're a small, independent agency of the United States federal government. If you're a civics teacher, we are part of the executive branch. But we have a three-part mission that includes protecting investors, maintaining fair and equitable securities markets, and we assist in the formation of capital for small companies. We have about 5,000 employees in the SEC. That's spread out over our headquarters office in Washington, D.C., and then we have 11 regional offices across the country, including Atlanta, and some of the bigger cities you would recognize, New York City, obviously, Wall Street, Philadelphia, Boston, Miami, and the real obscure one is Salt Lake City, Utah, believe it or not. We do oversee the self-regulatory organizations as well. Mike mentioned FINRA. FINRA works under the auspices of the SEC, as well as those other agencies, the Public Company Accounting Oversight Board. They're the independent auditors are a big part of making sure that publicly traded companies are playing by the rules and that their accounting and their numbers work. So there's a board that regulates the accounting side of that. Some other SEC responsibilities, as well as enforcing, on top of enforcing U.S. securities laws, is we do inspections, or what we call examinations, on the people and the firms that work in the industry. So registered investment advisors, we have staff here in Atlanta that go out to firms in our 5-state region, which includes, obviously, Georgia, Tennessee, North and South Carolina, and Alabama, and we send our staff out to those firms, and they look through their books and records and their processes to make sure that they're playing by the rules and keeping your money safe and not, playing on the wrong side of the law. It's important to know, too, that what you've seen from Hollywood and film and on TV is not necessarily accurate about who the SEC really is. Anybody seen The Wolf of Wall Street, right? There's a scene towards the end of the film where a bunch of guys and gals in blue windbreakers with big yellow letters on the back that say SEC come busting into the office, and they conduct a raid and they arrest people, right? Now, we don't do that. We don't have agents, and we are not a criminal authority. We have civil authority. So we don't send anybody to jail. We don't make arrests. If you're guilty in a case that the SEC brought to federal court, our penalties include, barring people from working in the industry. So if you're a CEO and you broke the rules and you're convicted, then we can bar officers of the company from continued work in a in a publicly traded company. And we can fine folks and make them repay ill-gotten gains. 2022, just so you know, we had 760 enforcement actions and we recovered over $6.4 billion, that's with a B, in disgorgement and penalties from those fraudsters and securities violators. We try to give most of that money back to the harmed investors, but Investor.gov is one of our two websites that the SEC operates. SEC.gov is kind of our agency website, has a lot of great information about the agency, our 5 commissioners, the different offices and divisions that make up the SEC. But our second website, which is aimed at investors and education mainly, is Investor.gov. And I would encourage everyone to take some time after the seminar today to check out Investor.gov. If you go to the tab where it says additional resources and hover over that, you'll see that there's a special section just for teachers and educators, because we recognize that segment of investors has some specific needs, and you guys have opportunities that with your pension, your confined benefit plans, and your contribution plans that are a little different from other sectors. So please check out Investor.gov. Financial fraud, it really is a big deal. A survey by FINRA found that 8 in 10 respondents were solicited to participate in a potentially fraudulent offer. So that's pretty prevalent, right? When 8 out of 10, 80% of investors have at some point been solicited for something that may not be legal. $50 billion a year that's lost. Our friends at FINRA, again, they're a self-regulatory agency. It's made up of professionals from the securities industry, and they work under the auspices of the SEC, but they are not an official federal agency. But they do have a very similar role. Talked about fraud in the movies. One of the things, and Mike kind of touched on this in his section, high-pressure sales tactics. I'm going to play a real quick clip here. Tell me if this sounds like somebody you want to do business with. If you've seen the film The Wolf of Wall Street, you know that story, and that is based on an actual case. Jordan Belfort, the character that Leonardo DiCaprio played, he was convicted by the SEC and also by the Department of Justice and went to jail for some of his violations. So let's talk about some of the red flags of fraud. Most of these are common sense. If you really stop and think about it, it's really common sense. And it's having investors having the wherewithal to make sure that if you find yourself getting excited about something, that you pause and recognize, hey, this sounds too good to be true, or some of these other red flags that we're going to talk about. It's easy to get caught up when someone who's a great salesperson like Jordan Belfort is giving you the pitch. So it's really important to keep you level-headed and recognize some of these red flags. Number one, if it sounds too good to be true, well, it certainly is. Pressure to buy right now. Any legitimate investment that is going to be a moneymaker and something that we should all be interested in doesn't have an expiration date or an expiration time, right? If you don't invest tonight, you're going to miss this opportunity. That's generally not the case at all. So those kind of tactics are just huge red flags. And if you don't have documentation, every legitimate investment, again, there should be a prospectus, so there should be offering documents. There's things that the law requires be disclosed to the investors. If the person giving you the pitch doesn't give you that, or they tell you they don't have any of that, red flag. Think about going somewhere else. Unrealistic returns. Anybody know, what's the generally accepted rate of return that the industry kind of focuses on for the securities markets? Anybody guess? 6, 7 in the back? 5%. Yeah, somewhere between 5 and 7% is generally, kind of in the range of what a legitimate investment or investor should kind of look for. If somebody's promising you 12, 15%, you might want to pause, right? Because that's now that's not to say that there aren't investments that do make that money, but again, it's incumbent on the investor to do the due diligence to make sure that you're not getting scammed, that it is in fact a legitimate investor from a legitimate company and a legitimate licensed and registered representative. Unsolicited offers, that's another red flag. If you were to go online and submit your email address or your phone number to get a text from a legitimate company that you recognize the name, that's one way you might get solicited. But if you get something out of the blue and you didn't submit it or you don't know where it came from, be careful. Some of them are legit. And again, use due diligence and make sure that they are. But if it's unsolicited, there's a pretty good chance that it's not something that you want anything to do with. Persuasive tactics. Jordan Belfort, again, selling ice cubes to Eskimos, right? That's something that is a big red flag. When they talk about the prospect of wealth, they're trying to get you excited and get to stop thinking about your due diligence and start thinking about what you're going to do 5, 10, 30 years from now in retirement when you've amassed this giant fortune with the great investment opportunity that they have for you, right? Don't think about that. Think about, is this good for me? Is it legit? Are you licensed and registered? Do the due diligence. I'm going to actually skip this one because this one's a little longer than I think we need to go into today, but I can paraphrase or summarize the video real quick. There's 2 versions. The first version, the salesperson gives the pitch and the customer, the client, buys it hook, line, and sinker and says all the wrong things and is ripe for fraud. In the second version, same pitch, but the client says, okay, send me that offer. Are you licensed and registered? What's your license number so I can look you up? And there's no answers for those questions. So again, high pressure, red flag, avoid it. Common scams. There are some commonalities that we see in the cases that the SEC brings, and they fall into some scams that actually have gotten names over time. And that's not to say that every scam, every scheme is exactly the same, but if you break it down, especially nowadays in the days of social media and the internet, they've taken classic scams that started years ago and they've put a digital spin on it. So it's high tech and it's got Facebook or some kind of social media tie-in to it, but it's still at its core. It's probably one of these kind of scams. And we want you to be able to identify them and look out for them, because if you don't, you're going to be ripe for fraud. One of those common ones is what we call a pump and dump. And that Jordan Belfort scam with Aerotine Industries, that might have been that. Pump and dump is common in what they call the over-the-market or over-the-counter stock markets or the penny stocks, right? Aerotine, 10 cents a share, right? It's common. You see these where somebody will buy up large quantities of shares of a company, a publicly traded company, and they want to pump up the stock even though the business itself doesn't really have anything that warrants the price going up. but the fraudsters will try to pump it up using marketing and, high pressure sales tactics, et cetera, so that they can sell a bunch of shares to unsuspecting investors. And then when sales are going up, the share price goes up with it, right? And then once they get to whatever their target is, then they dump all their shares and they sell them for the profit, and you're left holding a stock that's going to tank because the market just got flooded with all of the shares that the fraudsters sold. So the price is going to go back down, and now your shares are less than what you got. So that's one type of common scheme. Again, it's real common in the over-the-counter and the penny stocks, which generally, that's not, institutional investors are not buying stuff there. Everyday retail investors are probably trying to stay clear of that because it's a market that's just ripe with fraud. And the companies are they're just tiny little companies. Ponzi schemes, again, classic. This goes back decades. That's where the scammers, paying an existing investor with funds from the new investors. So it's just you're kicking the can down the road. You take the new money, you pay the old guy. He tells people that he got rich, and then new money comes in until the house of cards falls down because it can't last forever. Sooner or later, it gets figured out that it's not really a legit investment. Pyramid schemes. Pyramid schemes are, we've all probably heard of, there are legitimate companies that might sound like a pyramid scheme, but if they're actually selling a product and it's the core of their business is not just recruiting new salespeople, then that's kind of off to the side. But if at its core in a pyramid scheme, the only thing the bad guy's trying to do is recruit more people, right? So that's the thing you want to watch out for. So if you hear, family, friends, colleagues, acquaintances saying, "Hey, I got this great opportunity, come help me with Umbrella.com or whatever," and then so you take the bait. And then the next thing is, well, now you need to find 5 more people, right? And 5 people and 5 people. Well, what does Umbrella.com actually sell? Well, nothing. Okay. That's, again, do the due diligence on the front end. Ask the questions. If it sounds too good to be true, it probably is. Try to weed these things out. Do the due diligence about the company before you make any kind of investment. These pyramid schemes, again, there's variations on it. Blessing looms, has anybody heard about blessing looms? It's kind of a similar thing, but it's just a pyramid. You pay somebody $50, and then you get 5 more people or 10 more people, and they put in $50. The next thing you know, everybody's making money until they're not, because somebody said, "Wait a minute, this is just a scam. This is a pyramid scheme." But they have different names. Blessing looms, I've heard that one. There's a couple others out there, but it's just a pyramid. Investment newsletters. There are legitimate sources of investing and securities market news. Legitimate being the key word here. CNBC, Bloomberg. There are companies that's what they do for a living, and they have industry experts that are doing the research and providing advice. That's worth paying attention to. But there are other investment newsletters that are really just a kind of a scam where they're assisting somebody in an illegitimate investment, and they're pitching it in their newsletter to try to entice more customers. Make sense? So pay attention to the source of any kind of investment advice or education, if you will, where you're getting that. Mainly it's you got to kind of be like a reporter. You got to check your sources. Always make sure your sources are legit and the real thing, and not some kind of illegitimate, made up expertise. Advanced fee frauds, oftentimes you'll see this with solicited phone things or social media things. Hey, you had a bank account that you forgot about, and if you just pay me $25, we'll get you connected and you can claim your bank account. Any kind of investment where they tell you, well, if you just pay this fee up front, or if you pay this tax up front, then you can make access to it. No legitimate investment requires paying a fee or a tax on the front end. Again, Mike kind of talked about this earlier. People impersonating the TRS. It's not just the TRS. There's fraudsters out there that will play whatever role they need to play to pitch you the scam of the day and try to make you an investor. So beware of anybody that says they're with a government agency. Always do your due diligence. Check them out. Don't do anything on the spot. If they can't give you their phone number, their email, or their mailing address, and give you the opportunity to check them out, that's, again, giant red flag. The SEC, specifically, we do not endorse any kind of offer. So if somebody says, oh yeah, well the SEC approved us, we're good to go, they endorsed us. No, we are very neutral on everything. We don't endorse anybody. Binary options fraud, I gotta admit, this is one I don't know very little. I know very little about. I don't know much about it at all. It's very complex, but it's an options trade where there's basically a this or that option. If the option does this, you win. If it does that, you lose. So you can probably imagine that more often than not, it's on the that side that where you're the loser. But binary options, that's another one that's kind of it's predominantly an internet-based scam. Affinity fraud, this is something that's very legitimate, and it's insidious in that most of us don't even recognize that it's happening. And there are folks that are unwittingly part of the problem, right? Churches, civic organizations, there's all kinds of areas where you have groups of like-minded people that come together for whatever the reason may be. And if one person becomes an investor in something, if they're a winner, right, if they make some money, they're very likely to tell their friends and colleagues in these groups, hey, you know what, I just invested in this opportunity a couple weeks ago and I've already made some money. And the fraudsters know that this happens as well because there's social engineering involved. So they'll come to you and they'll say, hey, you know Bob, right? You remember Bob? He goes to your church? Yeah, well, Bob and I, Bob invested with me and you ought to talk to Bob because he's doing really well, right? Affinity fraud is where they're just trying to make a connection with you on a personal level to influence you into making an investment that you wouldn't normally make. Don't fall victim to that. Due diligence, again. Even if Bob tells you he's making money, get the details about the investment and verify that independently. Don't just believe Bob. Verify it on your own. Check out on broker check if the person that's selling this is legit and licensed. Check out and see if the company's registered. You have to do your due diligence on every single investment that you're thinking about. I'm a retired Navy guy, and it broke my heart when I first learned about this case where there was a Marine, former Marine, who ran a hedge fund, and he basically defrauded, a whole slew of people out of almost $2 million, based almost solely on the fact that he was going to other Marines, former Marines, and saying, hey, brother, you and I, we served together, Semper Fi, give me your money, right? It happens. And sometimes they're so good, you don't even know, you have no clue until it's too late. So those high pressure sales tactics, selling Eskimos ice cubes, those are things that, they make the hair on the back of your neck stand up. Pay attention to that. Groups that are targeted for, affinity fraud, seniors, ethnic communities, military, athletes. We've had a number of cases in the Atlanta office where we've had professional athletes that have been victimized for very large sums of money. Federal employees and teachers get targeted. Again, like Mike said, everybody knows that teachers have a great pension. If they can separate you from part of that, they win. Here's another quick video. That was the first public service announcement that the SEC actually did on television. It was about affinity fraud. So that is an indicator of how big a problem it is, that the topic that we chose for our first public service announcement was to warn folks about affinity fraud. Okay, so now you know some of the signs and red flags of fraud. We're going to tell you now how to try to avoid it. Talked about due diligence, right? You have to do your due diligence, and you have to do your research and verify that the investment professional and the company and the product are all registered, right? Again, if they're not, and you ask them about that, and you start hearing the tap dancing, that's the red flag. That's the one where you should pay very close attention. If you ask someone if they're registered and they say, well, my registration's pending, or, well, I'm working on that, well, red flag. Investor.gov, they're similar to broker check. You can do the same thing. You can pull up an individual. In fact, if you typed in Jordan Belfort, we're going to see here in a second, you can see their record. But you can see, if you type his name into broker check, he's banned by the SEC. He can never work in the industry again. And you can do that for anybody that's registered. And if you put in a name and nothing comes up, again, I tried to search you and I didn't find you in the broker check or the SEC database. Are you not registered? Edgar is another tool that we have. If you go to SEC.gov, Edgar is a database that the SEC maintains for the disclosures, the notifications that publicly traded companies in the U.S. have to file with the SEC. So if you're researching an investment with a company, or if someone's pitching you in an investment for a company that maybe you don't recognize, and you want to research the company, you can go to our database, Edgar, and you can search, and you can pull up all the filings that company has submitted to the Securities and Exchange Commission. Now, I will warn you, there are a lot of filings. There are things that they have to disclose to us by law, so there's a lot of filings. But there are certain forms in there that are just kind of periodic updates that you can go in and read and see. Like if the company makes a big announcement about a new product or something, or a new process or a service that they're going to provide, they have to disclose that to the shareholders So they do that by filing it with the SEC, and then they'll also make a press release or something along those lines too. But the official document is what gets filed in EDGAR. So you can go in and you can see those things if you want to do research, again, on a publicly traded company here in the United States. Unregistered companies, if somebody gives you the name of a company that you've never heard of, and they tell you, hey, they're trying to sell you shares in this company, well, first of all, ask them, is this a private company or is this a publicly traded company? If they say it's a publicly traded company, you can go to EDGAR and look it up. It's a private company that's a little more involved, but they should still provide you with disclosure documents to tell you about that. If they don't give you documentation, that's a red flag. That's what EDGAR looks like on the website. Again, it's a huge, as you might imagine, it's a huge database. So there's a lot of information there. And we actually have a specific office at headquarters that manages that, and you can even call them for assistance with searching if you're unable to find something that you're specifically looking for. Online accounts, online accounts are very prevalent nowadays, right? How many people have an investment account with any of the big trading firms like Fidelity or Vanguard or TD Ameritrade? Yeah, a lot of us do, right? Even TRS. You have online access. Mike, do you guys have online access to your retirement information you can see? So it's really important to protect those accounts, right? Strong passwords, two-step verification. These are things that are not new. This is pretty standard now, but don't ignore the fact that that's important. And if the website gives you the opportunity to not do it, I would tell you that that's not the best idea. You should use every secure technology that's available to you to keep your account safe. I get calls from the public every week about somebody or from someone who lost access to their account and a fraudster got access to it and wired the money somewhere else. SEC resources that we have to help you. We talked about Investor.gov. Again, there's a ton of information in there. A lot of it is aimed, I'll be honest, a lot of it is aimed at brand new investors or people that are just getting started. So if you're more of an advanced person or you're pretty comfortable, you may not have a lot to learn, but you're still probably going to learn something. The tab here where it says Investor Alerts and Bulletins, that's one that is great because those are issued after we've identified a trend or something that's important for investors to know about. So I would encourage everybody to go to Investor.gov and just check through the investor alerts and bulletins and see if there's anything in there that applies to your situation or something that you're considering. Here's some of the investor alerts that we've issued. Binary options, again, I apologize. I know very little about it. It's really complex. Through your school systems, you guys have access to the 403B and the 457 plans that Mike was talking about earlier. We want to encourage you, along with the TRS, to make sure that you're reading through those plan documents. That's really important before you make any investment, that you read through all that information so that you understand what you're buying, what they're promising you, what the policies and procedures are, the fees, and then anything that's going to cost you money. Those are things that all have to be disclosed, so you need to read through all that information. FINRA, again, our great friends over at FINRA came up with the broker check, but they also have another feature that's the fund analyzer. And you can put in 2 or 3 or several different mutual funds, and you can compare them side by side. So if you're considering, my school system has, option A or option B, mutual fund A or B available to me. Let me see which one's more appropriate for me. Go to the fund analyzer and put the name of those funds in, and you should be able to pull them up side by side and compare apples to apples to see which one's most appropriate for your situation. Investor.gov/teachers. The handout that we had in the lobby when you were checking in, that is actually offered on the website, as well as a lot of the other information that we've been talking about today. But there's that special section that I mentioned earlier that's devoted specifically to teachers and educators. We do, just so you're aware too, that the SEC has made teachers and educators a special interest group. We do make a concerted effort, across the whole country to get out and talk to teachers and educators. Again, because we recognize that the bad actors that are trying to separate hardworking people from their money, they go after the most likely targets, the people that have the most to lose. They're not going to go to people that are standing in the unemployment line to look for clients. They're going to go where the money is. And most teachers and educators, the system has either the pension or some type of asset that makes you a target. The last thing is, let's stay in touch. The SEC, how do we get wind of a lot of these cases? Well, some of them, the cases that have the really giant numbers in the tens and hundreds of millions of dollars, those come from high-level sources, and they're corporations that we're going after. The consumer kind of fraud, the retail investor fraud that you and I are most likely to be victimized, that comes from tips. How do we find out about it? Tips, complaints, and referrals. TCRs is what we call them. So we encourage anybody, if you've ever been solicited for something that you think is less than above board, or if you know somebody that is, we want to know about it. We're a data-driven agency as well. So the more we hear about a specific kind of problem, the more likely is that problem is going to get resources allocated to it. So you can go to SEC.gov, and right on the home page there's a button that says submit a tip, a complaint, or a referral, and tell us about it. Or if you're here in Atlanta and you just need help and you want to give us a call, or if you have a question, give us a call, 404-842-7676.